Trading has closed on the 22nd of March 2023. We'll do our disclaimer, go over our calls, and make some predictions. It's my trading plan for tomorrow, which is March 23rd, 2023. Please remember, I can be wrong. Trade at your own risk. Today we looked for the pattern with the early high, which is this, and tomorrow should also have the early high. I said I didn't really have a good system for trading on days of FOMC announcements, and rarely did. Here's what we said. We had a possible high at yesterday's high, but I said I wasn't going to risk money on it until it was killed or confirmed. I don't think either one of those things have happened. Early on, MEJT gave a signal for higher prices, a buy signal. We printed the minimum target immediately, but of course it went higher. We also had an optional target to trade lower, and that clearly printed. This rally here has a big F next to it. MEJT said it was false and that it wouldn't stick, and of course it didn't. This is the daily chart. This green line's a 200-day moving average. It's a support level of sorts, so we have a straight line drop right to, but not through support. Here's a general idea. We're looking for the end of this wave magenta B. If it ended today, which is always possible, I can't find a count. I can't find a clear way to count this up here. So I'm not convinced that wave's over, if this is even the right count. Well, this is the typical Fed whipsaw. We have this action that's pretty tough to trade. We have this wall into the close. It's often a sign of panic selling, and if it is a sign of panic selling, will move sharply higher at tomorrow's open. This low is the Fibonacci target of the prior consolidation, in addition to being right at the 200-day moving average. And if that's a stilt and that's a stilt, stilts can be split. This is a possible diamond on stilts pattern with support just under the origin of the left stilt. Now that's not the most convincing diamond I've ever seen, so I'm not certain that's the pattern. But there is support here. We drop to it in a straight line, and if we're going to continue lower, we really should gap under today's low. If, on the other hand, we get the typical three-leg whipsaw, which is leg 1, leg 2, and leg 3. Leg 3 should be further away from the FOMC announcement price, then this leg is down, so at least 4,063, and the same pattern that gave us this low gives us a Fibonacci target around 4,068. Tomorrow's pattern has early high. We could still gap down. Typically, it's a negative day, a bearish day with a low in the final hour. But if it's strong instead, if it's strong instead, then more strength should follow in days to come. The first move after the FOMC announcement was higher, and usually, almost always, that means the next move of consequence will be up. The typical pattern is for a three-leg whipsaw, with each leg further away from the announcement price than the last leg, implying at least 4,063 cash if the pattern plays out. It works often, but it doesn't always work. There's a wall into the close, and it's often followed by gapping up the next day. It's a sign of panic selling. There is support from the 200-day moving average, the Fibonacci target of the prior consolidation, and possibly the origin of the left stilt. Despite and even though it collapsed, the bullish percentage of SPX stocks with positive point in figure charts went up. This indicator measures how many get buy signals on the point in figure chart, and that went up. And the percentage of SPX stocks under their 200-a-day moving average dropped to as low as 24 after being over 50, I think, as recently as yesterday. And a big drop like that, a number like that, is often found near market lows. So if the market's to continue lower without interruption, it should gap under today's low. Now, if we get the whipsaw higher, there's a possible target of 4,068 cash. If the call for a rally is right, we should move sharply higher right from the open, and I'd be reluctant to risk money if that didn't happen. So I can't count the move up as complete. This is kind of an inexplicable action, which is typically seen after FOMC announcements. If we get the typical three-leg whipsaw, and we get the typical clue to the next move being up by the initial rally, we should have a rally right from the open, probably up to 4,068. Not in the day, of course. And if we continue dropping here, then I don't really have a good way to play it at this time. I'll have to get the more favorable entry point than we have right here. And that's today's call.